I think we have to talk about Apple. Shares of Apple falling 10% on Thursday after CEO Tim Cook warned investors first quarter revenue is going to be about $5 to $8 billion lower than previously expected. Several reasons for that, Maddie. The trade war in China, the economic slowdown in China, the battery replacement program that they had last fall. This was still a pretty shocking development.
Lots of moving parts, but you're right. I think this was pretty bad. I mean, if you look back just to their guidance back in early November, looking for between 89 and 93 billion in revenue, to come in then at 84 billion, so 5 billion below the low end of your guided range. That's a problem. And I think Tim Cook came out and said, CEO Tim Cook said that really 100% of the miss was due to China and a contraction in the smartphone market there. And I think it's a good excuse because it's probably the right excuse. And I think investors have been questioning whether or not the iPhone, especially the latest versions of the iPhones with the high price tags, could really penetrate the highly competitive smartphone market in China. And I think we're starting to see the fact that, no, that's not really the case.
Yeah, I don't think it's that surprising, actually, that Apple has China issues. I was just thinking back 4 years ago when Matt and I were talking about China in the context of our Supernova portfolio, just talking about opportunities and concerns. China was a big thing we were talking about. And at the time, we realized that China is a big opportunity simply because how many people are in that country. But we didn't necessarily expect it to play out the same way as it did in the U.S. And since then, the stock is about roughly flat with the market, which is interesting. But I think we started to see the cracks in the foundation about 2 years ago. And about that time is when I started studying Tencent, which owns WeChat. And it made me realize that iOS is far less important in China because WeChat really is the in-app operating system that people do everything in. And so that the same type of competitive advantage that Apple would have in the US with iMessage, Notes, just various services, that doesn't exist in China. And it showed in the data because at the time, the retention rates, so people who would have an iPhone that would buy another iPhone, outside of China was over 80%, but in China it was 50%, which is essentially a coin flip. And I think now, because of the economic turbulence that is starting to happen, trade wars, slowdown, we're starting to see that play out at an accelerated rate. People who would be the Apple buyers either already own them or did own them. The upgrade cycles are longer and retention is still suboptimal, and Apple has become to just have mediocre market share. And I think that's not necessarily going to change.
Yeah, I agree. And as long as the iPhone is such a large part of Apple's core business, they can talk about services all they want, but this is still a product that's about 70% of revenue and the majority of operating profits. Now, I will say this because we're positive people here at the Fool. I mean, coming into this report, Apple was already down about 40% from its high, and so. Granted, it had a horrible day, this week. It took it down even further. But even at the reduced earnings estimates now, you're looking at a stock that's only trading about 11 or 12 times earnings, certainly below the average market multiple. Now, if earnings come down further, stocks could certainly follow suit, but it's hard not to call it cheap right now.
Well, that's the thing, because Tim Cook talked about how he hadn't seen the December numbers. Therefore, there's no way he's seen the January numbers because they're not in yet. Their first quarter report comes out in early February. If you're looking at this stock and you're thinking, boy, it looks cheap, do you buy here or do you want to see what the actual numbers are before you put down a little money to buy some stock?
Oh, I don't know. It sounds like another coin flip to me. Like we don't really know. I mean, I do think that the valuation is somewhat compelling. You really are just making that iPhone sales stabilize, and you are betting that the services segment can become much more than 15% of revenue, which it is now. I think that most people think that is the case, at least around here. Like, that is the bullish stance. I have some more questions. When you have a monopoly taking 30% of every single transaction that goes on your ecosystem, regulatory issues will one day be a concern. The same thing that we've seen with Google or Alphabet, same thing we've seen with Facebook. One day that the same headlines are going to be going on with Apple too, and the services narrative will slowly not seem so amazing anymore.